You hide one small loss. In 1995, Toshihide Eguchi showed how hiding one loss ends. A mistake he should have admitted early turned into $1.1 billion in losses, years of fake records. A life built on panic, not because the first loss was fatal, not because he was clueless. What's interesting, admitting a tiny red number felt worse than hiding it. Next, you'll see why the first lie matters more than the first loss. It's 9:07 p.m. Your cash drawer is short $18. You know the clean move. Call the manager, write down the shortage, have the awkward talk, and go home. Instead, you tuck one receipt under the tray. You promise yourself you'll fix it tomorrow. That feels smaller, kinder even. But tomorrow starts with a crooked number, so the next count is crooked too. Now you need a second explanation, then a third. Very quickly, you are not fixing an $18 mistake. You are protecting a story about being the kind of person who never makes one. That is why the first line matters more than the first loss. The loss is a number. The lie is a job. It turns every future decision into cleanup. Trading works the same way. A position a trade you currently hold moves against you. The honest move is simple. Mark the loss, close it, and record why it failed. The dishonest move is quieter. You stop logging it. You move your mental line. You tell yourself it's only temporary, or that you'll deal with it next week. But the market keeps counting, even when you look away. The hidden mistake still ties up your capital, your trading or investing money. It still adds pressure, and pressure makes the next decision worse. Now you start taking weird actions just to defend the first one. You avoid your trading journal. You stare at the screen longer. You hope for a bounce, not because your reason is stronger, because admitting the mistake now feels heavier than it did yesterday. Small losses are cheap. Secrets are expensive. Once you hide the first red mark, your real problem is no longer the market. Your real problem is shame with a calendar. If this clicks, subscribe, you'll get 2 clear decision rules a week. So what do you do the moment a trade turns red, before your brain starts building a cover story? Your phone buzzes at 12:14 p.m., lunch break. You open the app. That clean green morning is now a small red minus, down $38. Not life-changing, just annoying enough to make you talk to yourself. This is the danger zone. Not because the loss is huge, because your brain starts negotiating. It'll bounce. I'll give it 5 more minutes. I can't close it here. That is how a tiny mistake turns into a private project. So give yourself 3 moves. First, write 1 sentence. What changed? Not your hope. The fact. Price fell below the line I needed. Activity dried up. I went too early. If you can't name what broke, you're already drifting. Second, use a stop loss. A preset price where you automatically get out of a losing trade. Didn't set one before you took it? Set a get out price now, and honor it. The goal is not to be brave. The goal is to stop the lie from getting a full afternoon. Third, cut the screenshot and scroll habit. No hunting for strangers online to tell you you're still right. No moving lines around to make the chart forgive you. Just record it, close it, walk away for 10 minutes. Notice what these steps do. They turn a secret into paperwork. Shame hates paperwork. But most people hit this moment and split in 2. One version of you admits the red, the other starts defending it. It'll come back. That's the sentence that turns a paper cut into surgery. By Friday, 2 versions of you can exist from the exact same mistake. On the left, it's Tuesday at 10:43 a.m. Your coffee is cooling off. A trade goes red by $86. You feel the sting. You write down what happened. Bad read, wrong timing, whatever the reason, you mark it, close it, and step away. You tell the truth while it's cheap. By lunch, you're annoyed, not trapped. By Friday, that loss is still small enough to explain in one breath. It cost money, it did not take over your week. On the right, the same $86 feels insulting. You don't want to be wrong. So you tell yourself the chart is just being stupid. You make the trade bigger. At 1:12 p.m., you check it in the office bathroom. Worse, now you can't admit the first mistake. You have to admit the second too. So you stop recording it. Numbers make it real. The goal changes. You're not trying to make a good decision anymore. You're defending your ego. Traders call that emotional trading, making trades driven by fear, excitement, or ego, not a plan. Notice what happened. The market did not create the real damage. Shame did. The first loss was a number. The second loss was a story. I can't be the kind of person who missed this. And stories are expensive to keep alive. At a card table, this happens fast. You peek at weak cards, someone raises the bet. You can toss the hand away and lose a little, or keep paying just to prove you weren't fooled. Poker players call the discipline move a fold, quitting the hand to protect your chips from a bad spot. That's the whole split screen. Admit the red, and you lose some money. Defend the red, and you start borrowing from tomorrow. Your sleep goes first, then your focus, then your honesty. The pattern is clear. Once you hide one mistake, the next lie gets cheaper, then cheaper again. A missed note becomes a missing statement. A missing statement becomes years. So what does this look like when a real person keeps choosing to defend it for not 1 day, but 11 years? A bond trader named Toshihide Iguchi made one bad move in New York. Instead of reporting the loss, he hid it. That sounds small. Embarrassing, yes. Career damage, maybe. But not world-ending. The disaster came from what happened next. Iguchi worked for Daiwa Bank's New York branch. He traded government bonds. He also ran the department that kept the records of those trades. That overlap mattered. It gave him room to bury the evidence. So when that first trade went wrong, he didn't take the hit and move on. He tried to earn it back. Then he hid that loss too. Then the next one. Here's the thing. Beginners miss this part. A loss hurts once. A hidden loss keeps charging interest in stress, lies, and bad decisions. Every morning you wake up owing the truth. Over time, Iguchi forged documents. He sold securities without permission. He shuffled records to make the whole look smaller. Calendar pages kept flipping. The secret kept getting heavier. By the time it finally ended, this had gone on for about 11 years. Not 11 bad minutes, not one ugly quarter. 11 years. And the number was staggering. The hidden losses had grown to about $1.1 billion. Pause on that. The original mistake did damage, but the cover-up did the real destruction. That's the lesson. Ever stared at a red number at 10:42 a.m. and thought, I'll fix it before anyone notices? This story is about that exact impulse. Same psychology. Smaller screen. You take a position, a trade you currently hold. It moves against you. You should close it. Instead, you move the line in your head. Then you tell yourself the thesis, your specific reason for the trade, is still fine. Then you hide the mistake from your journal, your spouse, or yourself. Now you're no longer managing risk. You're managing shame. That's what happened here at industrial scale. Iguchi didn't just defend a bad decision. He built a second job around protecting the lie. And once that becomes the mission is endless. In 1995, he finally confessed in a letter. Soon after, the losses became public. U.S. regulators moved against Daiwa. The bank was ordered to shut down all of its American operations. Iguchi later went to prison. So people hear this story and think the big number is the point. It isn't. The point is the first moment he chose to hide the loss instead of report it, not the trade itself. That is the fork in the road. On one side, you take the hit. Your ego stings. Your day gets worse. But the damage stops there. On the other side, you defend it. You add time, secrecy, and hope. Hope feels cheaper than honesty for about 5 minutes. After that, it gets very expensive. This is why small mistakes become account killers. Not because the market is evil, because hiding a mistake changes your job. You stop making decisions. You start protecting a story. And once you're protecting a story, one question matters. What simple rule cuts that spiral off before lie number 2 ever gets a chance? You're tracking a trade that's down a little. Not life-changing. Just enough to sting. And now 2 jobs are fighting each other. Protect your money or protect your pride. Poker solved this a long time ago. When a hand goes bad, the clean move is to fold. Folding means quitting the hand to protect your chips from a bad spot. For trading, turn that into a checklist. Call it the fold test. If this clicks, subscribe. We do this twice a week. 3 questions. All 3 need clean answers in 10 seconds. First, where am I out? That's your stop loss. Not somewhere around there, a real line. Second, how big is this trade? Traders call that position sizing. How much money you put into one trade. If the size is fuzzy, ego is usually driving. Third, if this were brand new right now, would I still take it here? If the honest answer is no, you're not managing a trade. You're defending a story. That last question matters most. Iguchi didn't get trapped by one bad bond trade. He got trapped by refusing to admit the first bad trade was over. The fold test stops that on day 1. Name your exit. Name your size. Ask the truth question. So what does that sticky note actually look like before your next trade? This week, make one rule. The moment a trade starts going wrong, write down the exact price where you're out. And if it hits, close it with no edits, no bargaining, and no revenge move after. If you want more plain English rules that help you protect your money and keep your head clear, subscribe.